let's start off with the general sentiment that we're seeing right now. We keep talking about equities reaching these 21-month highs, 18-month highs, hitting some resistance. Interesting to see that we are seeing some dollar strength, and we're also seeing commodity prices higher. So a bit of a disconnect from what we usually see.
I think that what we're seeing is more euro weakness than dollar strength, and that's why you're seeing that the normal disconnect, because what's happening at this point is that the euro is a lot weaker than it has been for a long time. You see it in the rand as well. The rand has been less than 10 rands to the euro for consistently for the last week or so, which is unusual. So what we're seeing is more euro weakness than dollar strength.
Looking at the currencies though, I mean, you mentioned the euro coming under pressure. We had the Bank of England keeping rates unchanged and the European Central Bank keeping rates unchanged. But of course, we know there's a lot of focus right now on bond yields, which have been widening significantly in Greece. Apart from that, euro coming under pressure. We've got a lot of flows coming into the rand. Where do you see the currency play going from here? Because we've also seen quite a lot of noise coming from China about an appreciation of the yuan.
I think the Chinese are waiting with bated breath to see that they are going into trade deficit, because that would give them a huge strengthening of the argument that they are not manipulating the yuan. The $2.3 billion of reserves that they hold aside, they're saying we're not actually we don't have an undervalued currency. They did allow the currency to appreciate quite a bit until the credit crisis hit, but since then they've kept the currency very stable. What seems likely is that every one of the big countries, Japan, the euro area and the dollar, are still going to keep interest rates very low for quite a while. So what seems to be the case is that the first one to significantly increase interest rates will see a significantly stronger currency. Now, what we've seen in the last week is that all the numbers out of the US for the economy has been significantly stronger than expected, and that might also feed into euro weakness against the dollar, because it looks like the dollar interest rates might go up before we actually see euro interest rates going up.
We had manufacturing production out in South Africa yesterday, and showing a growth of 2.7% in February, not as good as the January figure, which was a growth of 3.5%, but for the whole of 2009, the manufacturing sector contracted by 13%. We are starting to see signs that things are getting better though.
Things are getting better, but it's getting better very slowly. And most of the improvement actually comes in the export-related manufacturing. So what we're seeing is that the local demand is still extremely weak, and that obviously also feeds into the fact that the Reserve Bank has cut interest rates. They're saying, well, even though we're seeing all the leading indicators in the economy going up strongly, we still believe that domestic demand is extremely weak, and that's got to do with credit provision. We actually need more credit to flow into the economy.
And where do you expect that to happen though, Wikus? Because we know banks are still quite tight at this stage, and there's still a bit of nervousness around. I mean, something's got to give at some point, and things should get better.
It should get better. That's why you're seeing all these leading indicators going up. I think that the bank's current customers are getting a little bit of relief from the interest rate cut. What you have seen though is that motor sales for January is significantly up on a year ago. It's 20% up. So even though there is still some weakness, you're seeing the recovery coming through. The other thing that we are seeing is lots higher turnover in the property market. So the banks will get comfort to start lending when property prices start to rise, because that's the main collateral they take for their loans. So once you see the volume picking up in the property market, it doesn't normally take very long before property prices start going up. So by mid-year, maybe towards the end of the year, we should actually see property prices start to rise, and then credit should start flowing to the economy much easier.
We had sales out, retail sales out in the US yesterday. That jumped 9.1% in March. It's the highest increase on record, obviously beating expectations. And that, of course, comes with the fact that we saw initial jobless claims rising 18,000 last week. So a little bit disappointing, but we have started to see mixed data coming out of the US. Remember the non-farm payrolls last week, 162,000 jobs added, which was quite positive as well. But we've also got to just keep note of the fact that unemployment is still at 9.7% in the US.
9.7%, but shrinking, which is very, very important. So what typically happens is that the jobless rate is actually a lagging indicator. So if we're actually seeing jobs starting to improve, that means we've clearly seen the turn in the business cycle. And I think that we are seeing some reaction in the markets to that, also in commodity markets, because commodities, even though it was down a little bit yesterday, has been fairly strong actually over the week.
Taking a look at the World Bank loan that was granted to South Africa. Quite a big thing for us, $3.75 billion. We're going to go ahead with the coal-fired power plants, and this is despite the fact that there were quite a lot of lobbies against this loan because of the carbon footprints. The UK and the US, of course, as we know, big shareholders for the World Bank, and they were quite critical about whether South Africa should get it or not.
Indeed, I think it's a victory for South Africa, even though it is a bit of a diplomatic letdown that wasn't properly supported by the large countries. But I think that the argument that it is absolutely necessary for the South African economy held sway. And I think that it is extremely good news for South Africa, because even though one would want to see the whole electricity sector restructured, for the moment Eskom is it. And we need Eskom to build that power plant as quickly as possible so that we can get back to growth in the South African economy.
Looking at the week ahead, next week, US earnings will be underway, and I think that's going to be quite interesting, because it's either going to push the markets higher from these levels, or we're going to be seeing a dampener. We won't reach 11,000 on the Dow. We know that the JSE all share above 29,000. We're at 29,030.
I think that we're very likely to actually see the 11,000 mark very, very, very soon. But there are strong expectations that companies should be starting to do better. And if they don't, then obviously the market will be slightly miffed. But what we see for the immediate future is that earnings will start to increase significantly while interest rates still stay low. So while you've got the two factors that influence markets most is interest rates and earnings. So if earnings go up, interest rates don't, the market will be strong.